Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Please remember to like, subscribe, and share. For any investment questions, feel free to leave us a comment. If there are any questions I don't get to answer today, I'll address them in class tomorrow. Today, October 1st, we're heading into the market trends for the 4th quarter. In 3 months, this year ends. This is a good opportunity to review your holdings and trading performance. With October 1st marking a new quarter, I hope everyone can become more stable on their investment journey. Now, today's investment highlights. First is the Federal Reserve fumbling in the dark. Also, with new tariffs hitting, how should we respond? Why does the Federal Reserve say? Will it end up being a case of the blind leading the blind? As you all know, today the US government might be facing a shutdown. If the US government shuts down, some of the less critical departments may have to stop operations, temporarily suspend business, or even lay off employees or put them on unpaid leave. In particular, the U.S. Department of Labor's Bureau of Labor Statistics is responsible for releasing data such as weekly jobless claims, the monthly consumer price index, CPI, and, especially this week, the very important non-farm payrolls and unemployment rate figures, all of which are published by the Bureau of Labor Statistics. If these data points, which are exactly what the Federal Reserve relies on, these are important reference indicators for the Federal Reserve when conducting monetary policy adjustments. If these indicators disappear, if we can't see non-farm payrolls, can't see CPI, will that affect the Fed's new round of interest rate decisions at the end of this month? Will it? I want to explain, will it become the blind leading the blind, and the Fed doesn't know what to do? The Fed has other methods. The Fed won't be flying blind. What are those methods? I'll share that with you. Another key point is the arrival of a new wave of tariffs. Since August 7th, when Trump imposed global tariffs, many subsectors and sub-industries have been facing a new round of tariffs in semiconductors, electronics, as announced recently. Starting October 1st, new tariffs have been imposed on large trucks, steel, and aluminum. There are also tariffs on sinks, cabinets, and even today, on soft furnishings and wooden furniture. Basically, all these items are now subject to tariffs. With this new round of tariffs being implemented, when? This creates complications for the Federal Reserve when determining if inflation is high or low. Today, I'll detail how to interpret this new wave of tariffs. On the industry front, as the tariff war dragged on, many countries gradually signed agreements with the United States. Imagine Japan, South Korea, Taiwan, the EU, the UK, even China, many countries are in ongoing negotiations. What does it mean when these countries negotiate one after another? It means if national governments compromise, industries will follow. For example, as mentioned, industries like semiconductors, electronics, automotive, steel, and aluminum, companies and countries in these sectors will gradually soften their stance. Another industry to mention is pharmaceuticals. Pharmaceutical stocks, like Pfizer and Eli Lilly, recently showed goodwill, willing to seek tariff exemptions from Trump. Of course, they have conditions. As for how these conditions will affect Pfizer or Eli Lilly's stock prices, what kind of help will this provide? Is it just a short-term boost or a long-term story? Tonight, on the Good Night program, E will give commentary on related stock price positions. Let's look at Nike's earnings report, released today. Regarding Nike's earnings, one of the world's most important major retail and consumer brands, Nike is a top player. Their recent Q3 earnings report showed strong revenue and profit, beating expectations. However, they issued cautionary guidance for Q4 and the full-year outlook. How should we interpret these warnings? It's something to pay special attention to. In today's investment focus, we'll go through everything. Okay, good evening everyone, hello. Let me take a look at the current. ICSHRH, Sherwanan, Huizhen, good evening, also Ming, and you who is flying, Alice Fu, and Anaya, good evening, Mary, Sachin, hello. Just a reminder, next week no live stream because teacher Jian won't be broadcasting. Next week is October 6th, which is the Mid-Autumn Festival. Yes, the Mid-Autumn Festival. October 10th is National Day, so next week has many market holidays in the Taiwan stock market. All Chuanwang live stream programs will continue as usual, with other teachers sharing. Since I won't be live streaming next week, I'll be giving a talk at the Yonghe branch office on October 8th, Wednesday. If you want information about Taiwan stocks or macroeconomics, contact the branch office. Let's look at some economic data. This afternoon at 5 p.m., the Eurozone released data. The preliminary CPI for September, month-on-month, was 0.1%, matching the previous value and forecast. The year-on-year figure was 2.2%, matching the forecast, but slightly higher than last month's 2% by 0.2%. Overall, in terms of CPI, the Consumer Price Index. The Eurozone's inflation index is currently under control and remains relatively stable. Therefore, judging by the monthly and annual rates, it continues to slow. This slowdown will certainly benefit the Eurozone's next interest rate decision. Therefore, it is estimated that the Eurozone may still have a chance to cut interest rates in the future. Why? Because inflation data, at least in the Eurozone, is relatively stable. As for the US, pay special attention. At 8:15 p.m., we will show you the US ADP data for September. Zaya Finang is a private economic data company. Why is today's ADP so important? It will be released at 8:15 p.m. because it may replace the Finong or unemployment rate data that may not be released this Friday. The official Finong and unemployment rate data will be released at 8:30 p.m. this Friday. But if it is true, there are concerns about a U.S. government shutdown, so some data is unavailable. What are the alternatives? Of course, the ADP small smoke farmer data is particularly important. Also, there are related data like the PNI data for the manufacturing and service industries released on the Jin and Ming days. These data also serve as a reference for the Federal Reserve. The ADP small smoke farmer data was previously expected to be 54,000, but this time it was actually released at 50,000. We'll show you this data later at 8:15, which is more important than today's data. Also, at 9:45 tonight, the median S&P Global Manufacturing PNI for September will be released. Regarding the manufacturing PNI, we'd like to remind you that the U.S. service industry is slightly more important than the manufacturing industry. The service industry accounts for over 60 to 70% of our GDP, so we usually. When looking at US PNI data, the focus is more on the service sector. Of course, you need to pay attention to manufacturing as a reference, but in terms of importance, you can get the relative weight. Median manufacturing PNI last month and this month it's expected to be 52. As long as it stays above the 50 threshold, there shouldn't be issues. At 9:45, keep an eye on whether it remains above 50. If it stays in the expansion range, there's no need to worry. It means the U.S. economy is still moving positively. The 10 o'clock U.S. ISM manufacturing PMI is crucial. It was 48.7, expected to rise to 49, but remains below 50. See what happens tonight at 10. Will it go above 50? If it does, you don't want it too high. Don't expect it to jump to 52 or 53. If this data can hold steady at the previous value, around 48 or 49, that's ideal. You don't want it too low or too high, because then the Federal Reserve. The strength and likelihood of rate cuts by the Fed in October and December would still be there. However, if these economic indicators, like the PMI, suddenly perform extremely well, say jumping to 53 or even 55, then the market might interpret that as meaning there's no risk of an economic recession. But on the flip side, that also means the Federal Reserve probability of rate cut end of October decrease. Why? Economy performing strongly. Delicate balance, seesaw effect. When economic data bad, worries recession. When data really good, people worry won't be rate cut. Since rate cuts good for economy and stock market wants rate cuts. This data. It turns out data can't be too good, but not too bad. How to balance too good and too bad? Each economic data point is viewed differently. Sometimes, it might be non-farm payrolls. Sometimes ADP, PMI, CPI, PPI, or PCE. These numbers can be high or low, and if they beat expectations, it's positive, but if they fall short, it can be good. It's not always clear. As long as economic data doesn't fall too far below expectations, it still supports rate cuts. Everyone thinks, as long as no recession, there's a chance for rate cuts. Also, tonight at 10 p.m., another data point, U.S. construction spending month over month. Look at this one, previous value and forecast are negative 0.1%. This data is neutral, so it doesn't impact the market much. Tonight, the more important data is ADP at 8:15 p.m. Then at 10 p.m., keep an eye on ISM or S and AMP wink with tongue sticking out global PMI manufacturing indices. Jefferson is the vice chair of the Federal Reserve. He also has a permanent voting right. So, what did Vice Chair Jefferson say? He said that without the support of the Federal Reserve, the job market could face potential pressure, and he also forecasted inflation. He said that after this year, inflation will fall back to 2%. Just 2 short sentences. In fact, he already conveyed 3 key points, just 2 short sentences, but he already delivered 3 main messages. So when you listen to these officials' remarks, don't just skim through them. Sometimes, certain keywords actually reveal their true thoughts. For example, like I just mentioned, Jefferson said that without the Fed's support, there would be pressure on the economy. What does that mean? It means that if the Fed doesn't cut interest rates, his so-called support refers to rate cuts. If the Fed doesn't take action to lower rates, then businesses might face high costs, and consumers might not dare to increase their spending. The stock market might not necessarily go up either. So he said that without the Fed's support, without the Fed cutting rates, the job market will face pressure. This means the job market could head toward recession, there could be layoffs, and businesses would be stressed. So he's already made 2 key points. If the Fed cuts rates, it will save the job market. If the Fed doesn't cut rates, the job market will be under pressure. So you can tell he hopes things will move toward rate cuts to save the September market. Is that clear? The third key point is this. He expects inflation to fall back to 2% after this year. Why 2%? Because 2% is a very important target for central banks globally when it comes to inflation. If it's much higher than 2%, inflationary pressure is building and prices might be too high. If it's below 2%, that's okay, but you don't want it too low either, or it could turn into deflation, which is also bad. So he said that inflation. Currently, after this year, there's a chance inflation will fall back to 2%. What this means is that starting next year, even though this year might be affected by some tariff-related factors, maybe inflation will be a bit higher and more restless. What this means for next year is inflation will gradually return to the 2% range, reaching the 2% target. So, the Fed can continue cutting rates next year. Why? Because inflation is coming down to 2%, so rate cuts are possible. In just 2 short sentences, you need to understand what Jefferson is trying to say. His conclusion, rate cuts this year depend on employment, and next year, on inflation. That's all. Sometimes, when we read the text, it seems unimportant, but those 2 short sentences are packed with key points. Every part is important. Now, Collins. Collins is a voting member this year. She said if economic data supports it, there could be a further small rate cut this year. That's the key point. What data? Employment and inflation data. As long as inflation isn't excessive or out of control, and the job market doesn't decline too much, just gradually slows, then the Fed can make a further small rate cut. What does small mean? About a quarter-point cut, not a half-point. So that's what small means. What does further mean? Maybe in October, if data makes sense, they could cut by a quarter point, or maybe in December. That's what Collins, the voting member, means. As for Goolsbee said the labor market is still stable. He doesn't want to act on the chance that inflation is only temporary and cut rates prematurely. If the government shuts down, they will look for alternative economic data to use as a reference for making decisions in October. So, you see, if you read every single sentence carefully and look for the keywords, once you understand those keywords, you'll realize that every official, in every speech they give, they always reveal a bit of their inner thoughts, their little schemes, in every word they use. So, simply put, Goolsbee thinks that inflation right now is temporary. Inflation is temporary for now, but he's saying that even though inflation might be temporary, he doesn't want to rush into cutting rates just because of that. He still wants to see more data to support any decision. And even if the US government shuts down today or tomorrow, it won't collapse. The US government won't go bankrupt, so there's no need to worry. Sometimes it's open, sometimes it's closed, sometimes they're in business, sometimes they're not. When it comes to opening and closing, that's just how it is. If the US government shuts down, they'll just look for alternative data. For example, let's say tomorrow we're talking about employment numbers. If employment numbers can't be released due to the Department of Labor shutdown, and Friday's non-farm payroll and unemployment rate reports are unavailable, we won't see them, right? So what then? The Fed won't do anything special. They have plenty of other tools, like the PMI, as I mentioned. The CPI might be unavailable. As of mid-October, that's the situation. They can still see the PMI, the Purchasing Managers Index, and the ADP Private Payroll Report, plus other data. Many data sources, both private and official, provide supporting evidence, even without official numbers. Keep in mind the Fed currently still leans a bit more dovish overall. But as for what the decision by the end of October, whether it's dovish, hawkish, or if they'll continue with rate cuts, it's still too early to tell. There's at least a month to go. We'll keep tracking official statements as things develop. You need to understand the keywords in everything they say. Let's also discuss the government shutdown and Trump. Trump said a shutdown would bring many benefits, like many employees being laid off. The Congressional Budget Office estimated about 750,000 people would be furloughed. Besides the shutdown, he had another main point he wanted to make. In 2026, $1.01 trillion will be allocated to military spending, about a 13% annual increase. This includes investments in Canadian mining giants like American Lithium and companies like this one. In Nevada, USA, related projects like the Thacker Pass lithium mine are also set to receive investment. This shows that the US is focusing on these strategic resources. They are very proactive in either buying shares or making acquisitions themselves. For example, besides American Lithium, if you remember, just a couple of months ago, the US government announced an investment. What was it? They announced an investment in a US rare earth company called MP Materials, or MP. After the investment, the stock price jumped from $40 to $80, doubling, all because the US government bought in. So, going forward, you can keep an eye on whether the US government continues to get involved in these important strategic resource mining companies. For example, we can already see their involvement in rare earths, and now in lithium mines. Lithium is closely related to things like electric vehicles and power generation. Anything to do with power generation is tied to lithium. They've already invested in lithium, and next, it might include nuclear energy. Trump has been talking about developing nuclear power plants, since he believes the best way to solve power shortages is to build nuclear plants. In the US, he thinks wind and solar are useless and even harmful to the environment. He believes nuclear power is the safest, most environmentally friendly, and fastest solution, so he will push hard to develop nuclear energy. Whether it's small-scale nuclear or fast nuclear reactors, the key mineral for nuclear power is uranium. So, you should also keep an eye on uranium. Uranium mining is the main upstream raw material for nuclear power generation. Companies involved in uranium mining have seen their stock prices skyrocket recently. There are many, like 4U or UEC, you can consider them representatives. In the future, will the Trump administration invest in or take a stake in these key uranium companies? That's something everyone can keep an eye on. Because these are strategic resources. National defense is the Trump administration's main focus. Moving to yield, it's at 4.15%, median 3.65%. It's been stable, more volatility likely only in the week before the Fed's October interest rate decision. Otherwise, it's around 4.1%. When it drops, it bounces up and down. We'll re-examine it in late October. Market expectations for rate cuts hold steady at about 1.7 times, no major changes. The US dollar index slipped slightly today by 0.21%. The market is consolidating with fluctuations. The green line is the 50-day moving average. When price breaks and holds above this moving average, it indicates the US dollar index can reverse and move upward. But for now, it looks like we're in a sideways, consolidating pattern. Keep an eye on the 50-day moving average for the US dollar index. It's now 8:15. Let's take a look at the very important private sector ADP data that was just released. The ADP numbers just came out. Wow, this is a big deal. The newly released US September ADP employment numbers actually showed a decrease of 32,000 jobs. That's not an increase, which means the total number of jobs, thank you, everyone, didn't go up, but actually went down. This indicates that the overall job market is relatively weak. The job market is relatively weak. So, since the job market is generally showing a decrease of 32,000 jobs, which is much worse than the expected value of 50,000 and the previous value of 54,000, this is a significant miss compared to expectations. This suggests the job market is more sluggish, even leaning toward recession. This could also lead the Fed committee members to gradually adopt a more dovish stance. Because we see this ADP data being released, and if this Friday's non-farm payrolls can't be published due to delays, then the ADP becomes extremely important. It means that Fed officials might see this recessionary trend. Signals in October, a more aggressive rate cut is possible. This is ADP data, mini non-farm payrolls, released at 8:15. Everyone note, this is a recessionary signal, showing job decrease. Alright, now moving on to the trade war part. Let me briefly mention the trade war. Actually, every day, if you look at me, since which month this year? Since February, after the Lunar New Year. After the Lunar New Year in February, didn't Trump start imposing tariffs? When we look at those tariff news stories, don't you feel like, as you keep watching these tariff news, over time you start to get numb to it? In the end, you just get numb. Since February, tariffs were announced, then postponed for a month, then another 60 days. On April 9th, right after the Qingming Festival, they released a test paper detailing country-specific tariffs, causing a huge commotion. In April, right after Qingming Festival, April 7th, 8th, and 9th, 3 straight days of sharp declines. The Taiwan stock market dropped over 4,000 points in 3 days, and the US stock market. The Dow Jones, on April 8th, dropped thousands of points, causing huge global volatility. From the February announcement to April, and then about the tariffs, it kept getting postponed until August 7th when tariffs were finally confirmed. I don't know if there's that kind of. It feels like February, April, August, and then the whole world is gradually entering negotiations. Doesn't it kind of feel like, just like we're telling everyone now, with every negotiation, every announcement, every stock market fluctuation, in the end you'll notice that each shock gets smaller and smaller, and the aftereffects keep getting weaker. Why? Because the negotiations are moving in a better direction, toward more flexible tariff adjustments. At first, there was doubt in February, pressure in March, fear when the announcements came in April, and then numbness after the actual implementation in August. Now, in September, as countries continue negotiating, like I mentioned today with these three guests, including sub-industries like big trucks, cabinets, bathroom products, cork, lumber, bathroom vanities, cushions, and so on, all these everyday goods are getting taxed. But in the end, I really think the market has become numb to all this tariff news. It's like, fine, go ahead and tax, just do it, tax as much as you want. Tax less, tax more. In the end, Trump always does the taco move, concerns about prices too high, or other countries negotiate with Trump, he slows. He slows these tax actions, asking other countries to gradually cooperate, perhaps by increasing U.S. investment, or imports of American goods, and so on. Ultimately, as all countries compromise, the percentage drops from 50 to 30, then to 25, and finally to about 10%. So, will prices be affected? Yes, prices will definitely go up, but the degree of increase. You'll notice that as time goes on, the force driving up prices and the sense of fear actually decrease. Looking ahead to October, to quarter 4, or even into next year, there's still what's called the midterm elections. Will things move in a better direction? Why? When they act, it grows. Next year's election. So of course, Trump will also roll out a lot of so-called economic and policy incentives to support the stock market. So when you see this news today, just take a quick look at it. Things like cork and similar products, these things will affect prices and will also make the Fed's decision-making more difficult. But will they really have a huge impact on the market? For now, it doesn't seem like it. Still, everyone should keep these products in mind, because in the future, prices. It will fluctuate, but not melt down. Will prices rise? Yes. New York crude oil prices today, with few strange factors or geopolitical risks, rose slightly by 0.5%. However, a long way remains to reach the 200-day moving average. So, it looks like oil prices still appear volatile and weaker, so a quick look is fine. The ADP report just released showed a decline of 32,000 jobs, a sign of contraction. Later tonight, everyone will also be paying attention to the S&P with Tom sticking out manufacturing PMI and the ISM manufacturing PMI, which should be enough. As for tomorrow, there's the initial jobless claims, so we'll see if those get released. The day after tomorrow, the more important data will be the scheduled release of the U.S. unemployment rate and non-farm payrolls. When the time comes, if the U.S. government definitely doesn't shut down, then this data will probably be released on October 3rd. If there is a shutdown, it's not a big deal. We'll still have other things to track and share with everyone. Now, moving on to industry news, let's talk about Pfizer. Just take a quick look at this. We're saying that in various sub-industries, countries are willing to negotiate tariffs, and after rounds and rounds of talks, you can imagine that no matter what it is, semiconductors, or even the things we just mentioned like the tariffs on October 1st or October 14th, whether it's utilities, gas, all kinds of products, bathtubs, cabinets, all of these get taxed. In the end. Now, this even includes pharmaceuticals. Just a couple of days ago, didn't Trump say that for drug companies that refuse to lower prices or aren't willing to offer things like most favored nation treatment, or those pharmaceutical companies that won't negotiate tariffs, he wants to impose a 100% tariff on them? He just said this 2 or 3 days ago, and now, just 2 or 3 days later, today Pfizer has already said that they promise to offer most favored nation pricing for all their drugs and new medications in the US, meaning the lowest, very cheap prices. Plus, they'll provide discounts of over 50%. And then, on the government's Trump RX platform, what's this platform for? This platform is for patients, as long as you go to this platform. It's kind of like online shopping. You buy these medications online, and you don't have to go through any middlemen, so your prices are kept really low. For example, let's say today you want to buy a painkiller. Maybe you have a toothache or headache and need to buy Panadol, right? Let's just use Panadol as an example. Or maybe you often travel to Japan and buy those EBS or EB painkillers. They're really effective and easy to use. Now, if you're not seeing a doctor, not getting a prescription from a clinic, not going to a clinic. If you want to buy Panadol, or have a toothache or headache and want to buy EVU, can you? Yes, you can. Use the Trump RX platform to buy it directly online. It's e-commerce, shopping on Momo or Eastern Home Shopping. Buy it online, and the medicine will be shipped directly to your home. You don't have to go to the pharmacy, and you don't have to go to the clinic. Because if you go to the clinic, you have to pay a registration fee and spend a lot of money, and the process is complicated. Even if you buy it at the clinic or pharmacy, the price is higher. So, the reason Trump originally set up this Trump RX platform was to let everyone buy directly online and avoid being exploited by distributors. Now, Pfizer has said that they will start selling some of their medicines on this platform. These medicines might be discounted by more than 50%, which is a huge reduction. And because Pfizer is willing to lower prices by doing this, they've been granted a 3-year tariff exemption. Not only that, they've also promised to invest $70 billion in the US for pharmaceutical manufacturing. Of course, Trump is very pleased. Trump said, "Pfizer, since you're doing this, I'll exempt you from tariffs." In addition, Trump also said that Eli Lilly has performed very well, hinting that in the future, he'll be negotiating and discussing with all the major international pharmaceutical companies. Will these negotiations go smoothly? They definitely will, and they'll go well. Why? Just like I mentioned earlier, if even countries can reach agreements, then it's even more likely with these companies. The importance and influence of these companies within their countries is significant, but if Trump and the US can negotiate successfully with China, the EU, Japan, Korea, and other countries, then it's really hard for these companies within those countries to say no or to resist. Situation. So in the end, everyone remember, whether it's countries or industries, just keep this in mind. As long as you stick to investing in the US, buying American goods, and pursuing a strategy of major openness, you'll always have opportunities in negotiations. Let me say it again. Invest in the US, buy American goods, and keep things open. There will always be opportunities. So Pfizer today, well, actually yesterday during US stock market trading, closed with a big jump, which was pretty good. Today, it looks a bit more volatile, but for what to expect going forward, let's look at Pfizer's stock price here. Okay. Hi. Good evening. I'm coming on a bit late today. So, Pfizer's stock price surged nearly 7% yesterday. Even though today, I still want to remind everyone that although there's a positive catalyst from the tariff exemption, it's mainly because they're willing to lower prices and invest $70 billion in the US. But this is just the technical aspect. Let me add a bit more about the technical side of things with Pfizer. In fact, since hitting its low in April this year, Pfizer has been gradually trending upward. Then, in August, there was a period where it pulled back after a significant rise. Although it surged 7% yesterday, don't forget about this upward trend line that has been extending from April. It's now just about reaching the recent highs. If you look at the chart, you can pretty much see where it's headed, at what price level it is. So if it rebounds and comes up to the original resistance point of the trend line, there might be some short-term technical corrections to watch out for. You need to be a bit cautious until the day it can firmly stand above the 200-day moving average, or even get back above the trend line. That would be more favorable for its future development. As for fundamentals, like I mentioned, if investors give it a discount, and with $70 billion, basically, if you throw that money in, things become easier to negotiate. Now, when it comes to Pfizer and Eli Lilly, what are they famous for? Let me give you an example. Pfizer has well-known drugs. These pharmaceutical companies, honestly, when they invested in research and development, they spent billions of dollars, hundreds of billions actually, on R and amp winking and laughing. They invested a lot, so after all that investment in R and amp winking and laughing, of course the drugs they produced would sell well. And when they sell well, then the prices of their drugs basically aren't going to be that cheap either. Not cheap at all. For example, one of Pfizer's most famous drugs is Lipitor, which is used to lower cholesterol. If you go to the doctor and need medication for high cholesterol or other metabolic issues, Lipitor is a very well-known option. Everyone knows Viagra. It's extremely famous and made by Pfizer. Another example is the BNT vaccine, which Pfizer developed with Germany's BioNTech. When COVID-19 vaccines first came out, we remember AstraZeneca, Moderna, and BNT, right? These were well known. The BNT vaccine sold like crazy, and Pfizer was a partner. For rheumatoid arthritis, there's a drug starting with an X. I only know the initial, not how to pronounce it. That's also made by Pfizer. Now, moving on to Eli Lilly. Eli Lilly is well known for cancer drugs, anti-cancer medications, and their famous weight loss drug, Lepang. For diabetes, when it comes to blood sugar control and insulin, Eli Lilly specializes in that. Eli Lilly's weight loss drug and their insulin medication, which are used to treat diabetes, are in direct competition with Novo Nordisk. But if you look at market share, revenue, or performance, it turns out that Eli Lilly's weight loss and diabetes drugs are actually even more impressive than Novo Nordisk's. They actually sell even better. Also, Eli Lilly has another pretty famous drug. Do you know what it's called? B. Lilly also has a medication for treating depression, as well as one for bipolar disorder and even for schizophrenia. There's a drug for depression called Prozac 100, 200, the Prozac for depression. That's made by Eli Lilly. So, if you've ever met friends with depression, actually nowadays a lot of people have depression probably because of high stress, or maybe just because of life, financial issues, or all sorts of reasons, even academic pressure. Sometimes when you get stuck on something, when you can't get out of a rut, you just keep going in circles and can't break free. That's when some people develop depression or anxiety, or even bipolar disorder. There are a lot of people with these conditions nowadays. Sometimes, if you're not careful, you might see someone at the subway station suddenly lose it, and all you can do is keep your distance. Sometimes they really can't control it. So, when it comes to medications for depression, just remember depression medication. Prozac is famous, and I remember sertraline. With these antidepressants, it's best not to take them unless necessary. But if you can't control it, you have no choice, you must take them. Otherwise, some with depression might have suicidal thoughts, which is hard to deal with. I say it's best not to take them unless necessary because, after all, these medications can still build up in your body over time, which isn't great. Plus, with those antidepressants and anti-anxiety meds, I don't know if you've noticed this with friends or family around you, but people who take these kinds of medications often tend to sleep more and their attention is less focused. Their memory will weaken. Why is that? Because these medications help you rest more and stop overthinking. So they suppress activities in your brain. Some of the overly active cells or regions in your brain. When these areas are too active, you might feel anxious, manic, depressed. So basically, it forces you to calm down, be less active. Since it forces you to calm down, feeling drowsy, sleepy, trouble focusing, experiencing poor memory. That's why antidepressants Prozac. Although it's effective, you should avoid taking it if you can. As for how to help friends with depression or anxiety, besides the care and concern from family and friends, which I think is very important, their encouragement and support are extremely important. If necessary, you should also see a psychologist or get professional help. If you need some treatment or counseling, I think you shouldn't reject it. If you need to go, just go. Sometimes, with the pressures of modern life, it's not necessarily depression, and sometimes people with depression don't even realize it themselves. You might only discover you have certain symptoms and then realize, oh, I actually have a tendency toward depression. Sometimes, having depression doesn't mean you have to take antidepressant medication. It's not always that serious. Sometimes, it's just that we overthink things. There's a technical term for it. What is it called? Not visual disorder, but autonomic nervous system disorder, yes. There's a condition called autonomic nervous system disorder. Sometimes, when we're under a lot of stress and can't find a way to release it or let it out, we might develop autonomic nervous system disorder. When you have autonomic nervous system disorder, you might experience depression, sadness, or cry, and feel hopeless. But this doesn't mean you have depression. It could be autonomic nervous system disorder. You need to see a family medicine doctor, or see a neurologist to better understand whether you or your friends and family have these kinds of symptoms. If you have these symptoms, get the right treatment. Family care is very important. Why am I talking about this? Honestly, in today's world, many people around us are affected. I personally have 2 or 3 friends with depression, some with very severe depression. Some people even joke that if you get stuck in the stock market, just take a pill. Luckily, there are mice. Well, if you're stuck in the stock market and feeling a lot of stress, you might take a painkiller like Panadol, but that's not the same as taking medication for depression. You need to take the right medicine for the right symptoms. Don't just take anything randomly. That's why I say, just show a little more care and concern for your friends and family around you. Sometimes just encouraging them is enough. But for people with severe depression, do you know how bad it can get? It's hard for most people to imagine, because if you haven't experienced it yourself, it's really difficult to understand how tough it is for people with depression. They really do suffer a lot. It can get so bad that, first, they don't want to interact with anyone, don't want to talk, don't want to socialize, don't want to eat, and even feel nauseous at the thought of eating. In really severe cases, like I've seen with some of my friends, one of them had depression so bad that he couldn't even leave his room. He didn't have the strength to go out. He couldn't even walk from his room to the bathroom without holding onto the wall. He just couldn't do it. This isn't just a physical problem, it's a psychological issue. He couldn't go out, didn't want to interact or socialize because his depression was very severe. Deep. I'll discuss his recovery another time. He has many stories, and I'll share them with everyone in the future. Anyway, encouragement and support from friends and family. Having companionship in daily life is very important. We just mentioned Pfizer, and it's similar to Eli Lilly. Eli Lilly's Prozac is very strong. That's it for the Nike topic. Yes, I have Nike in my hand. Let me finish talking about Pfizer first, then we'll move on. First, not Nike yet. Nike is the second one. The other one, Cold Weaver, COVID. Meta signed a $14.2 billion computing power agreement with them. They supply latest GB300 computing systems and cloud infrastructure. Contract expected to last until after 2031, and it might even be extended. NVIDIA and Meta are working together. These collaborations, NVIDIA invested in NVIDIA, or they have collaboration with OpenAI, right? As for these companies like CRWE and the others, of course, the best part is that we shouldn't forget their godfather is NVIDIA. NVIDIA is the main investor in this company, so their godfather is NVIDIA. If COVID collaborates with Meta, it will also reduce their dependence on OpenAI and their biggest client, Microsoft, because Microsoft is basically COVID's largest customer, accounting for over 70% of their revenue. So we'll need to keep an eye on this company. Yesterday, it surged by 11.7%. As for Sunrun Green Technology, its recent performance has been good. Previously, it was consistently suppressed by both the 20-day moving average, the red line, and the quarterly moving average, the green line. It had been under pressure for quite some time. After its IPO, the stock price went from $30 or $40 up to $180, rising. From $180, it dropped, cut in half, falling to nearly $80. Recently, it has rebounded. With this rebound, it has finally climbed back above these lines. It finally got back above the monthly and quarterly moving averages, which had been a major resistance point. After breaking above this line, what was resistance, the monthly and quarterly moving averages, has been surpassed. This resistance will now turn into support. For CRWB investors, the company's fundamentals are solid, and their order book is strong. With their rich dad backer making connections, collaborations with Meta, OpenAI, or Microsoft have all performed well. The only issue is the stock price dropped from $180, undergoing a correction. In the short term, things look better as it climbed back above the monthly and quarterly moving averages. So, for those holding the stock, treat these moving averages as your short-term support. That's my update on COVID for everyone. Also, let's discuss Nike. Someone mentioned Anaya has a friend forced outside for sun due to depression. Depressed individuals dislike sun, don't want to go out, nor like cloudy days. Bad weather makes their mood unpredictable, significantly impacting them. Many face this, it's common. Back to Nike. Nike just released its financial report, so if you own Nike stock, pay attention. For Nike, third quarter revenue and profit performed well. Revenue was $11.7 billion, up 1% year over year. Yes, up 1%, you might not think that's much, but it was a misreading, only a 1% year-over-year increase, but it beat market expectations with an EPS of NT dollars 0.49. Nike also predicted a single-digit decline in revenue for the next quarter, quarter 4, and a 3% to 3.75% decline in gross profit margin. This is a significant decline, more than 3%. He also mentioned that he's been making some recent transformations, such as innovative clothing and shoes, as well as adjustments to inventory and merchandise allocation and operations. He's slowly transforming because, in fact, his sales have declined over the past year. To be honest, the copper and electricity sales performance hasn't been very good. We've been working hard on the transformation plan, so he said there's been some progress. Of course, he didn't say a lot, just some progress. But there's a downside. He still estimates that during the peak shopping season at the end of this year, what is a peak shopping season? Such as Christmas, Thanksgiving, Christmas, etc. He believes that revenue will still decline during this year's peak shopping season. If even the peak season declines, the off-season will be even worse, so you should pay attention. He has already provided this sentiment. In addition, he mentioned that tariffs are affecting their revenue and profits. The current estimated cost of tariffs is $1.5 billion, and for the full year, last year, and next year, the gross margin could take a 1.2% hit. This $1.5 billion figure is higher than their estimate back in June of this year. What does that mean? It means their costs and pressure are even greater, because in June, they estimated tariff costs at only $1 billion. But now, with the latest announcement in October, it's gone up. He said tariff costs increased from $1 billion to $1.5 billion. Gross margin loss, initially 0.75%, is now 1.2%. Pay attention. We should keep an eye on this going forward because whether it's Nike, Uniqlo, or LV, a lot of other major retail companies, including Walmart, Costco, department stores like Target, Best Buy, and so on, all of these are in retail sales. Whether it's daily necessities, furniture, or many other products, they're all directly impacted by the trade war and tariffs. After all, these companies import a lot of cheap goods from all over the world to sell, kind of like traders. When tariff costs and rates are high, their import costs will definitely go up. If they can't pass those costs on to consumers and have to absorb them themselves, their costs become much higher. So, when revenue minus costs leaves you with higher costs, your gross margin will drop. That's why, as mentioned earlier, the pressure from tariff costs is a big factor in the loss of gross margin. This is the ongoing impact. So, retail companies and consumer goods companies should pay close attention because the issues of tariffs and transformation are not to be underestimated right now. Even though Nike's third quarter revenue and performance were pretty good, and its stock price was up 2% to 3% in pre-market trading in the US today, which seems positive technically speaking, there are still some things to watch out for. Even though the financial report was released, in reality, the stock price has, since August of this year, the stock price has already started to decline. Back in August, it was above $80, but then it just kept dropping all the way down to nearly. It reached the 200-day moving average. From $80, it fell all the way to the 200-day moving average. The 200-day moving average seems to be holding for now, because if it doesn't, things could get really troublesome. It has already fallen below the monthly moving average and the regular moving average. And if you look at this, all the monthly and seasonal moving averages are now acting as overhead resistance, all pressing down from above, all pointing downward. Just like the Dow Jones, even if the Nasdaq, S&P wink with tongue sticking out 500, and many other major stocks experience pullbacks after a surge. Have you noticed these important AI stocks have at least two moving averages pointing upward? If both moving averages point upward, you can find a buy opportunity when a stock pulls back after a surge. Again, if both moving averages point upward, You can find a buy opportunity when the stock pulls back to the moving average. However, if both moving averages point downward, whether it's Taiwanese, US, Japanese, or Hong Kong stocks, check the two moving averages yourself. If they're pointing downward, forming downward pressure, remember to sell when the stock rebounds and hits the moving average. This is the most basic situation according to Grammar's 8 rules. For example, in that period, in other words, the two moving averages are above the upper resistance pressure, but only the 200-day moving average below is holding. If it falls below the 200-day moving average again, the next downward correction will reach this trend line, the neckline extending from March last year. This blue neckline is the next target. If it falls below the 200-day moving average, we will look at this moving average, this trend line. Today, due to positive news and a positive financial report, although its Q4 and full-year outlook isn't as good as expected, this good news, this good financial report, may give it a chance to hold the 200-day moving average. If you hold these stocks, pay attention. Pay attention to the 200-day moving average. If it still holds, then there's not too much to worry about. But if you ask whether its performance is as good as those AI companies or the Magnificent Seven, the answer is no, it really isn't. So, both the fundamentals and the technicals are here for everyone to observe. Yesterday, it went up about 0.26%. This is just an additional note about Nike for everyone. Alright, moving on, let's talk about CRWB. We previously discussed the 4C concept stocks like Coinbase, Circle, and CrossTracker, and then CoreWeave, the other one, seems to be rebounding. Coinbase has been consolidating with fluctuations, but recently showed some activity. Circle is the weakest, moving sideways, consolidating repeatedly, getting weaker. CrossTracker I haven't checked yet. So, among the 4C concept stocks, that's the current situation. CoreWeave is doing better because of strength of orders and support from -88, but only slightly better. Still, I think it's safer to operate based on technical analysis and combine with fundamental analysis for observation, because after all, these 4 stocks have high PE ratios and valuations. People are looking at their potential, not their PE ratios, which are high. It's about the dream, not reality. Let's take a look at US and European stock markets before opening. Yes, there are rumors that BlackRock is planning acquisition moves, so IES surged 12.7% in pre-market trading in the US. Southwest Airlines rose 4.76%. Nike was up 3.57% pre-market. Coinbase recently showed rebound in trading volume. Coinbase was up 1.67% pre-market, reaching $343. Newmont, Occidental Petroleum, and American Airlines also rose 1.4%. Occidental Petroleum, today we heard some news that Berkshire Hathaway, Warren Buffett's company, is planning to invest in a subsidiary of Occidental Petroleum and is looking to acquire it. They're spending $10 billion, so how things will develop, we'll explain in more detail later. Qualcomm had a slight increase of 0.37% in pre-market trading. Micron Technology dropped 2%. Netflix fell 1.74%. News Corp and Supermicro Computer, SMCI, both dropped 1.4% in pre-market trading. The market trend is still volatile. Keep an eye on tonight's 8:15 p.m. ADP Small Business Employment Report, expected to be weaker than market expectations. Overall, the job market remains relatively weak and cooling. As for the US government shutdown, honestly, I don't think it will have much impact. Even if it shuts down today, just let it. Whether long or short, opinions will differ. If it lasts a week or just 3 to 5 days, it's not a big deal. Important departments will operate. Less important ones will open later, at most, that's all. But if the shutdown keeps going and lasts more than 35 days, then you need to pay a bit more attention. Why do I mention 35 days, you ask? Why is it 35 days for a shutdown? Why not 40 or 28 days? Why 35 days? Back in 2018, during Trump's term, there were actually 3 government shutdowns, and the longest one, I remember, lasted about 35 days. At that time, it was all because of the funding issue for the US-Mexico border wall, and the debate was heated and dragged on endlessly. So the government ended up shutting down for over a month. That's why I mentioned it. If there was a precedent of 35 days in the past, then in the future you could say, as long as it's within 35 days, there's no need to worry. Beyond 35 days, it might impact the economy or policies, but the impact isn't big. GDP won't drop by 1% or the economy go into recession because of this. So whether the government shuts down or not, it's not important because it's going to reopen. The point is whether economic data released is good or bad, and how it affects the Federal Reserve's monetary policy. That's what matters. Whether data is released early or late, we'll see it. The Dow Jones Index is above 20 and 50-day moving averages, up 0.18%. The Philadelphia Semiconductor Index rose 0.9% yesterday, and it's above monthly and quarterly moving averages. Performance is good. TSMC and NVIDIA hit new high, it's strong. As long as this AI bubble hasn't burst, let's keep going. If it goes up, if it comes down, when the price gets close to the monthly moving average or there's a dip during the day, just try to buy on the dip. Keep buying when it drops, buy at lower levels. And when there's a new high, sell a little near the highs. Maintain this tempo and focus on buying the real leading industries, the real leading stocks. That's safer. Because with these leading stocks, even if you accidentally get stuck in the short term, there's still a chance to break even. With leading stocks, even if you're stuck in the short term, there's still a chance to get out. But if you're not buying leading stocks, no matter how much the market or the index goes up, it really has nothing to do with those weaker stocks. The market hits new highs, but those weak stocks just keep hitting new lows, still breaking down. So if you want to trade, if you want to buy, just buy the strong ones. For strong stocks, buy AI-related groups. When there's a pullback, clear positions and buy at lows. When there's a new high, sell in batches. Stick to this principle. The Magnificent 7 is strong, up 0.14%, above the 20-day moving average. It needs to lead, so keep an eye on the Magnificent 7. 8:50. Today, I've talked for 50 minutes. Before every market opens, we provide updates. When class is over, remember to like, subscribe, and share. Smooth trading. See you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.